Ben ritrovati, siamo su Food New York Stock Exchange, l'ultima giornata di una settimana più breve del solito. Domani venerdì non si contratta per la pausa, per la festività pasquale. Intanto quest'oggi gli indici continuano a perdere terreno e potrebbe essere la peggiore settimana dell'anno, almeno per lo Standard & Poor's 500. Ne parliamo con la mia ospite qui sul floor del New York Stock Exchange, che è Doreen Mogavero, che è fondatrice, presidente e amministratore delegato della Mogavero Lee Co. Doreen, thank you so much for being with us.
Thank you for inviting me on. Appreciate it.
So Doreen, now we are back down. It's the last day of the week. What so far is the worst week of the year? So the second quarter really is not starting as well as the first one. Fears for Europe. ECB and Federal Reserve, they signal they are not going to stimulate the economy and the markets again. So a lot of fear here.
Well, I mean, I think it had to happen eventually, and I know most traders were anticipating that it would happen sooner versus later. So I think a pullback like this could be very healthy as long as it's sort of controlled and not a panic selling, which we've had a very controlled downtrend in the last couple of days. I think that it's clear that the Federal Reserve is not going to be here right at this moment, but I don't think it's clear that they will never be here if needed. You know, I think that still remains a possibility. I think Europe, it's much more likely that they will come back into the market than the U.S., only because I think that they're a little bit further behind in the recovery process, obviously, right? So I think, excuse me, all being said and done, I think it's clear that we are on a better path. But this is going to be a very slow, I mean, we've been talking about this for weeks and weeks, and I think, in fact, that's correct. It's going to be a very slow recovery. You know, what can you do? That's it.
And also talking about the Federal Reserve is not only an issue of QE3 or not QE3, but also in June, Operation Twist expires, and Ben Bernanke is not really saying anything about that. So from June on, really, it could be that the market will have to trade on fundamentals.
Well, I think it's probably the way it should be. I mean, I'm not adverse to the market trading on its own. You know, I think it's better that way, and I quite frankly would not like to see the Federal Reserve come back in. I would like to see everything. I mean, this is death by 1,000 cuts. You know, I mean, this just keeps getting bigger and bigger and bigger and bigger. And although it's a temporary fix, it's moving a much bigger problem just a little bit further down the line. So to me, I'm very happy to see it go away. I think it's sort of counterintuitive. I mean, I would have thought when the Chairman of the Federal Reserve tells you that the economy is getting better and you don't need the government to help you anymore, markets should have roared on that news. You know, I think that's an indication of the fear that's really out there. I think people are nervous at the fact that there may not be a sort of support system in place if we need it. I mean, I think there will be, but all that being said, you know, I think quite frankly, it's just good news to me that we're doing better and we don't need them.
Now, going back to this week, you were saying, yeah, the reaction has been negative, but no panic. Do you think that this movement that we are seeing, could it be the beginning of a correction, or really it's only that investors are very cautious, waiting for the figures, the job number tomorrow, and the earnings season?
Well, I think it is a short week. Investors are being very cautious. Excuse me one moment. They are being very cautious, but I do think that it would be healthy to get a pullback. There have still been, I mean, if you look at the mutual fund industry, the majority of the money is still coming out. Outflows are still at record numbers, and I think that what we're trying to hope for here is to get investors back in. So the good news about a dramatic pullback might be that if we get valuations back to where people are comfortable with them, we may get some investor money back in. So that would be a good thing, and ultimately a very healthy thing for the market. Nothing goes up in a straight line forever. I mean, you know.
And of course, if we don't have the data that we want tomorrow, it is probably we're gonna go back, you know, and come back on Monday morning and carry on with the trend, the downtrend. What do you think is gonna happen about the numbers? We saw today that the jobless claims were they're very close to the 4-year low. Do you think that we can still trust those numbers?
Well, I mean, there are the conspiracy theorists out there that are saying that, you know, we are getting numbers, important key numbers on a day where we're not here because they don't want us to be able to react to them and have, you know, a few days to digest those numbers. I'm really not in that camp. I don't think it's quite that convoluted, but I do think that we need to get significantly better numbers regardless of whether we're here or we're not here in order to keep this market going in an uptrend. So I think we'll have a couple of days to digest whatever it is that we get. I think I'm anticipating that there really eventually is probably not much change. And by that I mean even up or down slightly is not a big deal. I think you need a significant move to really make it impactful. So I think the overall trend right now is what's dictating the movement of the market. So I think even if we improve somewhat, even at unemployment levels where they are now, we still need to do much better. So I'm not sure that even the same number might not continue a downtrend.
And just for the conspiracy theories, someone will react. I mean, Asia, Europe. So actually, you guys might exactly. But yeah.
So that will be where people can do things. So
we definitely will see a little bit of the reaction initially.
Probably. I will be cooking, so it's all right.
I will be eating.
Yeah.
Now, going back to the market, retailers this morning, incredible numbers. A lot of them beat expectation. The month of March, it was pretty good for sales, even though retailers are cautious about April. Yes. Now they can see us.
Yeah, now they can see us. Hi, we're here.
And so the month of March has been pretty good. Different factors, warmer temperature, Easter is coming early this year. A lot of retailers cautious about April, but March is very important for the first quarter for the results. What these numbers tell you?
Well, I mean, they surprised me, quite frankly. I would not have thought they would have been that good. I know I haven't spent particularly any money, in this last quarter, so I'm glad that they did well. I don't necessarily think it's indicative of what's going to go forward. I think most companies have guided much lower and have tempered their expectations for at least the rest of the first half of this year. So I think I'm going to kind of stick with those companies in terms of thinking that this could be a difficult quarter coming up. If you look at last year, as we spoke about last week, last year between May and October, S&P lost 21%. Summers traditionally are slow. Oil prices are a factor, and we're coming into a season where oil prices generally go higher. So I think all of these things together would make the average investor just at least cautious, if not slightly negative. So
we will see next week.
Yes, we will.
Thank you very much, Doreen Mogavero, for being with us, and happy Easter.
And happy Easter to everybody. Happy Easter.